Hey everyone, hope you're having a great day. Today, I'd like to share with you about a time where my mother had to face a threat to compliance during her practice as an accountant. My mother is a practicing accountant who does a multitude of different tasks for her clientele on a daily basis. Things seem to be going fine on her daily routine when one day, one of her clients which operates in Singapore wanted to save money by reducing on the corporate taxes paid. This could be done by increasing the director's fees artificially, which increases personal income tax. This way, the client could save money on the difference between the decreased amount of the corporate tax and the amount of personal income tax increased. Now, allow me to explain why this situation is against compliance. Because there is a spread between the scalable individual tax and the 17% corporate tax rate, it is very easy to see why directors might do this to save on all the tax without evading it. However, taking away money from the company's funds without having any legitimate reasons is being unfair to shareholders, as less dividends are declared when more directors' fees are given. A fundamental principle of being a professional accountant is to meet the general responsibility to act in the interest of the public. And it would have been broken if my mum was to allow this to happen. Now, this is all in line with professional competence and due care, as the accountant firstly has to be aware that the client is intending to do all of this without her advice, and she also had to exercise due care to the company shareholders. Now, a relevant safeguard would be to always ask the company director if you could first take a look at how they are planning their corporate tax. As every company has to plan their corporate tax wisely, my mother could give her advice and then tell the directors what was right and what was wrong with doing so. This will also prevent such a problem from occurring. Another relevant safeguard would be to gather a second opinion in the form of hiring a third party to compute the corporate tax, as they would have the greatest knowledge and experience in giving their expert opinion and separating between what is right and what is wrong. One last safeguard I can think of, which is my favorite, honestly, is to alert the shareholders if the company is intending to continue as aforementioned. This can give shareholders time to react to a change in the dividends payout. A shareholder's voice is also usually more convincing than that of a tax computer or an accountant. Now, with all that said, I conclude my case study. Of course, all credits go to my mother, who is a practicing accountant and sole proprietor who does a smorgasbord of different accounting tasks for all her clients. If it were not for all her experiences and encouragement, I would not be where I am today as an accountant in training, and I believe that I would also not know what would I become if I were to remain directionless. Thank you.